Hi everybody, here's a chart that you won't see anywhere else in the world. And it tells you the real story of what's going on in China in terms of how foreigners think about it, behave towards it, and buy the local currency government bond market. It shows the allocation of not the dedicated emerging market debt investor base, those mutual funds and ETFs that have got to buy EM local currency bonds. And Chinese local currency bonds are in that index, the GBIM Global Diversified Index. This is what the unconstrained investor base is doing. We're sampling data on a wide range of global bond funds, those that can cross over, that can choose to buy China. They're unconstrained. And it's a one-way street for the last 2 or 3 years. So they're now holding around 7–8% allocations towards it. So this is what's driving that buying in China, the crossover investor base, not the dedicated investor base. We can see that in the absolute numbers as well. This chart here shows the stock in US dollars of foreign holdings of Chinese, mostly local currency government bonds. It's big. That's over $300 billion, or if we express it in local currency terms to avoid valuation effects, it's big and on a rising trend. And the data that came out recently showed that money keeps coming in. Got a little bit quiet earlier this year, it's still coming in. And to reiterate my point, it's because the global bond funds are buying, not the local currency bond funds. They're already filled. Their benchmark now includes China. Their allocation towards it is increased. So they're not going to be buying real large amounts more unless there's a good reason. But just because this component isn't buying doesn't mean that there is a bigger, harder to track component, those crossover funds that are buying. It's difficult to tell how long that could continue, but there's clearly plenty of room in their portfolios to increase allocations if they so choose.